The past, present, and future of Solana. Introduction. Solana is a high-performance blockchain known for its scalability, low transaction costs, and rapid transaction speeds. Since its launch, it has garnered significant attention and a growing user base in the blockchain ecosystem. This report outlines the journey of Solana, examining the challenges faced in its early days, current developments, and future prospects. Past challenges. Solana's past has been marked by several challenges, particularly in the year 2022. Notably, the network experienced a series of outages which raised concerns about its reliability and security. These halts coincided with the collapse of FTX and Alameda Research, which significantly impacted investor confidence. During this turbulent period, the network's performance was scrutinized, leading to a loss of trust among many users and developers. However, the Solana team worked diligently to address these issues. By the end of 2022 and into 2023, substantial improvements were made, resulting in the network achieving 100% uptime year-to-date by October 2023. During the same period, Solana's total value locked TVL saw a remarkable recovery, nearly doubling from 25.12 million SOL to 30.95 million SOL. Technological innovations. Several key technological advancements have contributed to Solana's resurgence and ongoing growth. 1. State compression. This innovative technology has significantly reduced the costs associated with minting NFTs, making it a game changer for developers. For example, minting 1 million NFTs now costs approximately $113 compared to $253,000 prior to the implementation of state compression. 2. Firedancer. Developed by Jump Crypto, this new validator client aims to enhance the network's performance and scalability with a target of processing up to 1 million transactions per second TPS. The introduction of Firedancer is expected to further optimize the user experience on the Solana network. 3. QUIC protocol. The transition to the QUIC protocol has improved transaction processing, enhanced data flow control, and reduced downtime, addressing many of the issues that plagued the network in the past. Current landscape. As of late 2023, Solana has witnessed increased enterprise adoption, with notable partnerships including Visa, integrating USDC settlements on its network, reinforcing Solana's role as a viable platform for financial transactions. Shopify, collaborating to develop payment solutions that leverage Solana's capabilities. Additionally, the liquid staking landscape on Solana is expanding, although currently only 3 to 4% of staked SOL is locked in liquid staking protocols. The yield for staking SOL remains approximately double that of Ethereum, providing a strong incentive for users to participate in the ecosystem. The Solana ecosystem has also seen a surge in consumer-facing applications, including NFT marketplaces and decentralized finance DeFi platforms, which capitalize on Solana's speed and cost-effectiveness. Ecosystem growth. The Solana ecosystem continues to grow, driven by various projects and initiatives. Liquid staking protocols, platforms like Marinade Finance and Jito, have gained traction, contributing to the overall growth of the ecosystem. Consumer applications. The development of consumer-facing applications has accelerated, with Solana being recognized as the leading chain for large-scale NFT mints and DeFi activities. Future prospects. Despite its current positive trajectory, Solana faces several potential risks. 1. FTX/Alameda liquidation. The pending liquidation of FTX/Alameda's SOL holdings poses a significant risk to price stability. If large portions of SOL are sold in a short time frame, it could lead to substantial downward pressure on the market. 2. Network reliability. Continued scrutiny regarding network reliability is crucial. Any future downtime could severely impact Solana's reputation and trust among users. 3. Competition. As the blockchain space evolves, competition from other networks may challenge Solana's growth and market share. Timeline of events. 2021, Solana gains traction with high TPS capabilities. 2022, network halts and FTX/Alameda collapse undermine confidence. 2023. Early, Solana achieves 100% uptime. Q2, introduction of state compression technology. Q3, announcements of partnerships with Visa and Shopify. Q4, ongoing developments in liquid staking and the Firedancer upgrade. Conclusion. Solana's journey illustrates a blockchain that has navigated significant challenges through innovation and strategic partnerships. Its focus on advancements such as state compression and the Firedancer upgrade positions it favorably for future growth. While risks remain, particularly concerning the potential liquidation of SOL holdings and network reliability, the overall outlook for Solana as a hub for decentralized applications and finance remains optimistic. With continued technological progress and growing enterprise adoption, Solana is poised to play an increasingly significant role in the evolving landscape of blockchain technology. Counterintuitive information in the content on Solana, past, present, and future. 1. Resilience following catastrophe. It's counterintuitive that Solana, after experiencing severe downtime and reputational damage due to the FTX/Alameda collapse, has managed to achieve 100% uptime in the subsequent year. Many would assume that such a significant setback would lead to prolonged distrust and decline, yet Solana's recovery has been swift and notable. 2. Cost efficiency of NFT minting. The introduction of state compression technology has dramatically reduced the costs associated with NFT minting, making it over 2,000 times cheaper. This is counterintuitive, as one might expect that high-demand activities like NFT minting would lead to increased costs on a blockchain known for its speed and throughput. Instead, Solana has managed to lower these costs significantly. 3. Liquid staking growth potential. While Ethereum has seen about 40% of its staked ETH locked in liquid staking protocols, Solana currently has only 3 to 4% of staked SOL in similar protocols. The expectation might be that Solana, with its technological advantages, would see a higher adoption rate for liquid staking. However, this indicates a substantial growth opportunity rather than a weakness, as the low adoption rate suggests significant room for expansion. For enterprise adoption versus market sentiment, the increasing enterprise adoption of Solana, highlighted by partnerships with Visa and Shopify, contrasts with the lingering skepticism from the broader market regarding its stability and reliability. One might expect that successful partnerships would correlate with a more positive outlook from investors. Yet the potential for large sell-offs from FTX/Alameda's holdings creates a complex narrative. 5. DeFi velocity. Although Solana has the highest DeFi velocity compared to its peers, it has a relatively low total value locked TVL. This implies that Solana is highly active in terms of transactions relative to the liquidity available. One would typically expect higher TVL to correlate with higher activity, but Solana's ecosystem shows that it might be capitalizing on efficiency and speed rather than sheer capital inflow. 6. The role of QUIC protocol. The adoption of the QUIC protocol, which improved transaction processing and reduced downtime, is unexpected given that other blockchains may struggle with similar upgrades. It is counterintuitive that Solana, which previously faced severe network congestion, could turn around its performance through a protocol change that many might consider too complex or challenging to implement effectively. 7. Developer interest in SVM. The Solana Virtual Machine SVM currently only commands a small market share compared to Ethereum Virtual Machine EVM, yet the interest from developers is reportedly increasing. This suggests a future shift in developer preference that contradicts the current dominance of EVM, indicating that Solana may be on the verge of a breakthrough in attracting decentralized application dApp developers. 8. Market reaction to liquidation risks. The potential liquidation of FTX/Alameda's SOL holdings poses a significant risk, yet it's counterintuitive that this could happen amidst a period of growth and enterprise adoption. One would assume that positive developments would shield Solana from such volatility, but the reality is that market sentiment can swing dramatically based on large sell-offs, regardless of underlying technological advancements. 9. Optimism versus challenges. Despite the optimism surrounding Solana's future and its technological innovations, there is an underlying tension regarding its previous network reliability issues. Counterintuitively, while Solana's technological advancements position it for success, the memory of past outages could continue to haunt its reputation, illustrating a dichotomy between current progress and historical performance. 10. Decentralization metrics. The Nakamoto coefficient, a measure of the decentralization of the network, has remained stable at around 30 to 31% despite the concentration of stakes controlled by the Solana Foundation. One might expect that a higher concentration of control would result in a lower coefficient, but the actual growth and diversity in validator clients may mitigate this risk, presenting a more complex picture of Solana's decentralization efforts. These counterintuitive elements illustrate the dynamic landscape of Solana, showcasing both the challenges it faces and the unexpected strengths it has developed in response to these challenges. The blockchain's journey reflects broader themes in the cryptocurrency space where resilience, innovation, and market sentiment often intertwine in unexpected ways. Overlooked insights on Solana's past, present, and future. 1. Impact of state compression on NFT minting costs. One of the most significant yet often overlooked innovations in Solana's recent history is the state compression technology, which drastically reduces NFT minting costs. The ability to mint 1 million NFTs for approximately $113 as opposed to the staggering $253,000 without it is a game-changer. This not only democratizes access to NFT creation but also encourages a proliferation of projects that can now afford to mint at scale. The importance of this technology extends beyond mere cost savings. It fundamentally alters the landscape for digital art and collectibles, allowing for broader participation from artists and developers who may have previously been priced out. 2. Firedancer validator client and its implications. The development of the Firedancer validator client by Jump Crypto is another critical advancement that is often undervalued. By aiming for 1 million transactions per second, TPS Firedancer not only targets performance improvements but also enhances the overall reliability and scalability of the Solana network. This capability has implications for the entire ecosystem as it paves the way for more complex and demanding applications that require high throughput. The success of Firedancer could solidify Solana's position in the competitive landscape of blockchain technologies, particularly as decentralized finance, DeFi, and gaming applications continue to grow. 3. QUIC protocol's role in network stability. The transition to the QUIC protocol is another technical enhancement that warrants more attention. By replacing the older UDP-based transaction propagation method, QUIC improves data flow control and reduces the likelihood of network downtime. Given Solana's past issues with network halts, this upgrade is crucial for restoring and maintaining user confidence. However, the impact of QUIC goes beyond just addressing past issues. It sets a foundation for future innovations and supports the growing demand for seamless and quick transactions on the network. 4. Liquid staking potential. While liquid staking is a growing trend with only 3 to 4% of staked SOL currently locked in liquid staking protocols, the potential for this area to expand significantly is often overlooked. The higher staking yields compared to Ethereum provide a compelling incentive for more users to participate in liquid staking, which could increase Solana's total value locked TVL and overall ecosystem health. As new liquid staking protocols emerge and existing ones enhance their offerings, this segment could become a critical pillar of the Solana ecosystem, facilitating greater liquidity and capital efficiency. 5. Enterprise adoption as a growth catalyst. The partnerships with major corporations like Visa and Shopify represent a pivotal shift towards enterprise adoption of blockchain technology, particularly for Solana. Visa's integration of USDC settlements on Solana is not just a technical achievement, it signals a broader acceptance of blockchain solutions in traditional finance. Many overlook how such partnerships could drive user trust and mainstream adoption, leading to increased transaction volumes and a more robust ecosystem. This trend could attract more developers and projects to Solana, further enhancing its utility and relevance in the market. 6. Nakamoto coefficient and decentralization metrics. The Nakamoto coefficient, which measures the minimum number of independent entities that can collectively shut down a blockchain, is essential when discussing decentralization. While much focus is placed on TPS and TVL, the health of Solana's decentralization metrics is crucial for long-term sustainability and security. A stable Nakamoto coefficient indicates a robust network that is less susceptible to coordinated attacks or failures, which is vital for maintaining user confidence and ecosystem integrity. 7. DePIN and its long-term potential. The emergence of decentralized physical infrastructure networks DePIN within Solana's ecosystem is an area that is likely to see significant growth but often goes unrecognized. With projects like Helium and Hidemapper leveraging the blockchain for decentralized infrastructure, this narrative could reshape traditional business models and create new economic opportunities. The intersection of physical infrastructure and blockchain technology opens up a realm of possibilities that could redefine how we think about utility and value in decentralized networks. 8. Consumer-facing applications and market usability. The development of consumer-facing applications highlights Solana's usability and edge in the market. The rise of platforms like Tensor and Backpack Wallet demonstrates a commitment to enhancing user experience and accessibility. The ability to mint and trade NFTs seamlessly on a user-friendly platform is a critical factor that could drive mass adoption. However, this aspect is frequently overshadowed by technical discussions. Yet it is consumer engagement that ultimately determines the success of any blockchain ecosystem. 9. Potential risks from market volatility. The looming threat of liquidation of FTX/Alameda's SOL holdings is a significant risk that could destabilize the market. While much attention is paid to Solana's technological advancements, the potential impact of these sell-offs on SOL's price and market sentiment can't be understated. The community often focuses on growth narratives without adequately addressing the risks posed by external factors like market manipulation or large-scale liquidations. Conclusion. In summation, while Solana's technological advancements and partnerships are widely discussed, several underlying insights and risks are often overlooked. The implications of state compression, the Firedancer client, and the QUIC protocol on the future of Solana are profound, as are the potential impacts of enterprise adoption and liquid staking. Understanding these elements is crucial for anyone looking to grasp the full potential and risks associated with Solana as it continues to evolve in the rapidly changing landscape of blockchain technology. 1. Technological innovations and upgrades. State compression. This innovation drastically reduces the costs associated with minting NFTs on Solana, enhancing its appeal for developers. The cost of minting 1 million NFTs has dropped from over $253,000 to approximately $113, marking a more than 2,000-fold decrease. This advancement not only positions Solana as a cost-effective platform for NFT deployment but also encourages a wider range of applications in the NFT space, thereby increasing overall network utility. Firedancer. This new validator client aims to significantly enhance Solana's transaction throughput, targeting up to 1 million transactions per second TPS. Such improvements are crucial for maintaining Solana's competitive edge against other high-performance blockchains, particularly as user demand grows. QUIC protocol. By replacing the previous transaction propagation method, QUIC has improved transaction processing efficiency and reduced network downtime. This advancement is essential for ensuring reliability and user trust, particularly given Solana's history of network interruptions. 2. Current landscape and ecosystem growth. Enterprise adoption. Solana's partnerships with major corporations such as Visa and Shopify signify a growing acceptance of its blockchain technology in mainstream finance. Visa's use of Solana for USDC settlements and Shopify's integration of Solana Pay highlight the network's potential as a foundation for future financial applications. Liquid staking. The emergence of liquid staking protocols like Marinade Finance and Jito represents a significant development within Solana's ecosystem. With only 3 to 4% of staked SOL currently locked in these protocols, there is substantial room for growth, especially given that Solana's staking yields are approximately double those of Ethereum. This presents an attractive opportunity for users looking to maximize their returns on staked assets. 3. Risks and challenges. Market volatility from FTX liquidation. The potential liquidation of FTX/Alameda's substantial SOL holdings poses a significant risk to market stability. If these holdings are sold off rapidly, it could lead to a sharp decline in SOL prices reminiscent of the volatility seen during the FTX collapse. This risk is compounded by the fact that the market is still recovering from prior disruptions. Network reliability concerns. Despite achieving 100% uptime in 2023, ongoing scrutiny regarding Solana's reliability remains a concern. Any future network halts could negatively impact the community's confidence in Solana's technological improvements, potentially hindering user adoption and ecosystem growth. 4. Future prospects and innovations. EVM compatibility and developer adoption. The introduction of Hyperledger Solana, which allows developers from Ethereum to deploy applications on Solana without learning new programming languages, could significantly increase developer engagement and application diversity on the platform. This compatibility may catalyze Solana's growth in the DeFi and NFT sectors, attracting projects that previously focused solely on Ethereum. Emerging DeFi applications and upgrades. The Solana ecosystem is witnessing the development of innovative DeFi applications such as Drift Protocol and MarginFi, which could enhance the overall utility and attractiveness of the network. These applications are experimenting with point systems and unique incentives which could drive user engagement and increase transaction volume, further solidifying Solana's position in the competitive blockchain landscape. In summary, Solana's evolution reflects a combination of significant technological advancements, strategic partnerships, and emerging risks that shape its trajectory. The blockchain's capacity to innovate and address past challenges will be crucial in determining its future success in the rapidly changing landscape of decentralized finance and applications. 1. Bitcoin's rise and fall. The MTGOX incident 2014. The MTGOX exchange was once the largest Bitcoin exchange in the world, handling approximately 70% of all Bitcoin transactions. In February 2014, it filed for bankruptcy after announcing that approximately 850,000 Bitcoins had been stolen due to a security breach. This incident severely affected Bitcoin's reputation and value, causing it to plummet from around $800 to below $400. The fallout from MTGOX led to increased scrutiny on cryptocurrency exchanges and prompted discussions on security regulation and the need for more robust infrastructure within the crypto space. 2. Ethereum's DAO hack 2016. Ethereum, known for its smart contract functionality, faced a significant crisis in 2016 when a decentralized autonomous organization DAO called the DAO was hacked, resulting in the loss of around $60 million worth of Ether. The incident prompted the Ethereum community to implement a controversial hard fork in order to reverse the hack and return the stolen funds to investors. This event led to the creation of Ethereum Classic, which continued on the original chain without alterations. The DAO hack sparked debates on security governance and the ethical implications of blockchain technology. 3. The collapse of Terra Luna 2022. The Terra Luna ecosystem, which included the stablecoin UST and the Luna token, collapsed in May 2022, leading to a loss of approximately $60 billion in market capitalization. The failure was attributed to the unsustainable algorithmic nature of UST, which was supposed to maintain its peg to the US dollar through a mechanism involving Luna. When the system began to fail, panic ensued, causing UST to depeg and Luna's value to plummet, severely impacting the broader cryptocurrency market. The collapse raised questions about the viability of algorithmic stablecoins and led to calls for stricter regulatory oversight within the cryptocurrency space.
Future outlook for Solana. 1. Continued technological advancements. As Solana progresses, we can expect ongoing enhancements in its technological infrastructure.
The implementation of the Firedancer upgrade aiming for 1 million transactions per second TPS is a significant leap forward. This upgrade is anticipated to not only boost performance but also optimize network efficiency.
Additionally, the adoption of the QUIC protocol will likely continue to improve transaction processing and reduce downtime, solidifying Solana's reputation for reliability. 2. Growth of liquid staking. Liquid staking is set to become a pivotal feature of the Solana ecosystem. Currently, only 3 to 4% of staked SOL is locked in liquid staking protocols. As awareness and usability of these platforms increase, we can forecast a substantial rise in the percentage of staked SOL in liquid staking. This growth could enhance capital efficiency and expand the total value locked TVL in the ecosystem. With the yield for staking SOL remaining competitive, approximately double that of Ethereum, attraction for users will likely increase. 3. Expanding enterprise adoption. Solana's partnerships with major corporations like Visa and Shopify signal a promising trajectory for enterprise adoption. As more businesses recognize the benefits of leveraging Solana's high throughput and low costs, we anticipate further integrations. The potential use cases for Solana's blockchain in payments, digital assets, and decentralized finance DeFi applications will likely expand, attracting institutional interest and fostering a more robust ecosystem. 4. Ecosystem diversification and innovation. The Solana ecosystem is expected to diversify with new applications and services. The rise of consumer-facing applications utilizing Solana's advantages, speed, cost-effectiveness, and innovative features like compressed NFTs will create more engaging experiences for users. Furthermore, the integration of tools such as Hyperledger Solana will allow developers from Ethereum to transition to Solana more seamlessly, potentially increasing developer activity and further enriching the ecosystem. 5. Market volatility and price stability. Despite the positive outlook, Solana faces risks that could impact its trajectory. The looming liquidation of FTX/Alameda's SOL holdings presents a potential for market volatility. If large sell-offs occur, Solana's price could experience significant downward pressure. However, if managed effectively, the transition could stabilize over time, especially as the ecosystem continues to grow and attract new users. 6. Enhanced decentralization efforts. As Solana implements additional validator clients such as Firedancer, the network's decentralization is likely to improve. This diversification will enhance security and reduce potential vulnerabilities, fostering greater confidence among users and investors. A more decentralized network can also encourage broader participation, promoting a healthier ecosystem. 7. Regulatory considerations. As the blockchain landscape evolves, so too will the regulatory framework surrounding it. Solana and other blockchain projects will need to navigate the complex regulatory environment, which could impact their operations and adoption rates. Proactive engagement with regulators and a focus on compliance will be critical for Solana to sustain its growth trajectory. 8. Community and ecosystem development. Community engagement will continue to play a crucial role in Solana's future. Initiatives that encourage developer participation, user education, and community-driven projects will foster a sense of ownership and innovation within the ecosystem. As more developers build on Solana, the influx of new projects could drive demand for SOL and increase the network's utility. Conclusion. In summary, the future outlook for Solana appears optimistic, with significant potential for growth and innovation. Continued technological advancements, expanding enterprise adoption, and the growth of liquid staking are key drivers that will shape Solana's trajectory. However, the ecosystem must navigate risks such as market volatility and regulatory challenges.
By addressing these concerns and fostering a vibrant community, Solana can solidify its position as a leading platform in the blockchain space, paving the way for a decentralized future.